Hello everyone, hope you're doing well. Okay, so today's agenda is basically a last part of the audit, or the final part of the audit, as you say. That is the audit opinion. Audit opinion is basically the area where you are finalizing your work. Mainly, what is happening whenever you are in the phase of finalization or winding up the process, you have a review of the complete audit by a quality reviewer. This will detail This will carry the detail in AAA, where you will be studying ISQM, where you will be seeing that a quality reviewer is appointed who is at the level of the audit partner who is working on the client. The quality reviewer basically is doing what? He is basically checking the work of the audit and identifying any key significant mistakes that the auditors have made while they were conducting their work. Okay. Now, in the opinion phase basically focuses on what? It focuses on giving a output of the work they have done. The evidence that they have collected based on the work they have done of the substantive procedure is to be presented here as a form of opinion. Okay. Now, opinion is based on materiality. Yes, it is based on materiality. Materiality is a key component when you're forming an opinion, because on the basis of materiality, you are developing a site whether the financial statements have a slight error or have an error in the complete domain. If it has a complete error or complete financial statements have a misstatement, that means that there is a big issue with us. We will give a separate opinion for that. We have other inclusions in it. This is just an overview of what audit opinion is, but in section E, we will be seeing a lot more about every possible aspect that has occurred or will occur will be continued there or discussed there. Okay, so let's begin. An audit opinion is the final conclusion of the external auditor expressed in audit opinion on whether the financial statements are prepared in full material respects in accordance with applicable financial reporting framework or they are not. The type of opinion depends on whether this is any misstatement in the financial statements. So whether misstatement is material or pervasive. Now you have heard the word pervasive. Okay? Before we move forward, it is better that I explain you the word pervasive. Now we have already discussed what is material. Materiality is a line, is a threshold. If you breach that, that means your financial statements are materially misstated. This amount is important to us. This will affect our economic decision making. And what is pervasive? Pervasive is basically a concept that identifies, that tells us that the effect is not concise to one domain. It is spread all over the financial statements. An easy example, a harsh one, but I'll try to explain it. A person has cancer. Okay? A person has cancer in one of his body parts. So doctors may usually say that I have seen in TV shows or movies that the particular disease is in this particular area and the other body is free. If you remove this area, then your body is free from this particular disease. Okay. If you remove this area or operate it and if you remove the cancer from that particular part, then we can move forward. Yes. So what he is saying that except for this area, except for this particular area, your body is on the point or good or healthy. Okay. Now this is basically where we say that this is material but not pervasive. When the auditor or when the doctor says that except for this one area, everything is okay. This is called as material but not pervasive. Okay. Next, what is pervasive? Pervasive is when the doctor says that the cancer has spread all over your body, when the cancer or the disease has spread all over your body, and now there is no chance of recovery, or there is no chance that we can amputate or remove it from one area and let the other go. So same as that, you are looking at the financial statements where the material misstatements. The material misstatements are spread all over the financial statements. And we are looking at a position where more than one or more than two or more than three areas are being affected by a misstatement that is so big that we cannot limit it to a single area. The complete financial statements are wrong. So that's where we say that the financial statements are material plus pervasive misstated. So pervasive basically means that the disease or the problem has spread all over the financial statements and it's not concise to one. Now, why am I telling you this? Why am I telling you separation between those? Because on this particular distinction, our audit opinions also change. Shouldn't they? They should. Why? Because if a problem is spread in one area, I should highlight that only this area was problematic. Other than that, everything was on point. But if the whole financial statements are wrong, I should give a separate opinion. I should tell the shareholders or the other parties that this is a big problem for us. We are changing our opinion because of the pervasiveness of the effect of the misstatement. Mainly, there are three types of opinions, or we can say four types of opinions. The first one is the standard opinion that is called a good opinion, that is known as an unmodified opinion, unmodified or unqualified opinion. Okay. This is the most common and desirable audit opinion. It means the auditor has obtained sufficient appropriate audit evidence and concludes that the financial statements present are true and fair view in all material respects. So the financial statements are correct. Everything is true and fair in all material respects, and the auditor is satisfied with the evidence he has gotten that the representations that were made in the financial statements are representing the company as a true picture. The financial position, performance, and the cash flow of the entity. Conditions for an unmodified opinion include no material misstatements were found. The auditor has unrestricted access to all the evidence, all accounting standards and legal requirements were complied with. Okay. So that means the financial statements are true and fair, everything is on point. Okay. An extract for audit report I have given you so that when you read the audit report and you go through it, you know which type of opinion is it without even reading the heading. Now, our objective of this first section was basically to give you a complete know-how what an audit is. So that if you're moving around, if you're going around and someone asks you what an audit is, you can give them a complete detail or share her a complete detail that this is an audit. So if you are studying this subject right now in this first section and you have an interview, you will be more than prepared to go and attempt or give other answers for all the questions you ask. But from next section, we are going to go for specialized areas and we are going to look into them, how each different aspect or different ISA work and how they are practically implemented. Okay. So, extract, in our opinion, the financial statements present fairly in all material respects. In the financial position of XYZ Limited, as at 31st December 2024, the financial performance and its cash flow for the year ended accordingly made with the International Financial Reporting Framework. This is an extract of our audit report. Now, you might think that what does unqualified mean? And the next opinion is our qualified opinion. I'm going to tell you that. First, let's read qualified opinion. Qualified opinion is given when the auditor identifies a material misstatement, only a material misstatement, not pervasive. A limitation in audit scope, but the issue is not pervasive, that it does not affect overall financial statements. So there are two situations where we can have a qualified opinion. One is material misstatement, second is scope limitation. Now, after we have done this, I'm going to give you a very easy mind map. It will be very easy for you to revise this particular topic in which condition what is happening. Okay. So there are two situations where we have a qualified opinion that says material misstatement and scope limitation. Material misstatement says that the assets or the accounting was not done correctly. Material misstatement says that accounting was not done correctly. And limitation of on scope says that auditor could not obtain audit evidence due to some restrictions imposed by the entity or some other areas. Now, an extract from audit report says a qualified opinion, in our opinion, except for a possible effect of matter described in the basis of qualified opinion, the paragraph and the financial statements present fairly in all material respects. The financial position as at 31st December 2004 and financial performance and its cash flows are at the rate. So here what the keyword is, the keyword here is except for the possible effect or the except for the effect in the matter described in the basis of qualified opinion. They are limiting it to one area. They are limiting it to one area, not going beyond that. Okay. So here I can try to give you a partial mind map. Look, this is the line. Okay. This is the line of materiality. Now, a qualified opinion basically says that the misstatements has qualified this line. They have won the race towards qualification. So if misstatements are material, you give a qualified opinion. If misstatements are immaterial, you give a unqualified opinion or an unmodified opinion. So the basis of qualification and unqualification is materiality. Okay. So if a misstatement exceeds the materiality level, it is a qualified opinion. If it is below the materiality, it is a qualified opinion. Now I'll try to give you a mind map here. So our financial statements have two types of error, have two types of problems due to which we cannot change our opinion. Okay. First is that we can have a material misstatement and we can have a scope limitation. Okay. There are basically two things. Material misstatement pertains to accounting. Material misstatement pertains to accounting. Scope limitation pertains to it refers to that the work that we were doing was restricted by the management. The management is not allowing us to continue our work, or there are some circumstances due to which we are not unable to obtain the audit evidence, and it is beyond our control. Okay, material misstatements occur due to SAD. If you're SAD, it is material misstatement, and if you have LC square, it is known as our scope limitation. What does SAD mean? SAD means suitable. S means suitable accounting treatment not opted. You have not opted a suitable accounting treatment. You should have treated an asset under IS 40, but you're treating it as under IS 16. So it is representing a material misstatement. Okay. A application of the accounting standard. You have not applied the accounting standard appropriately on your financial statements or on your particular areas. And D, that refers to disclosure. Disclosure has two parts. One says no disclosure, and the other says inadequate disclosure. Both are a problem for us. So this is why we have a material misstatement. If a misstatement is material, we give a qualified opinion. If a misstatement is material plus pervasive, we give a adverse opinion. We're going to read what an adverse opinion is just for the sake of knowledge. I'll give you a mind map. Now moving on to LC square. LC square says that L represents limitation imposed by entity. Limitation imposed by entity. That means the entity is not letting us do our work or obtain evidence. Then C represents circumstances that are beyond the control of entity. What does it mean? Circumstances beyond the control of entity means that the entity is unable to do anything to help us. That means basically a natural disaster due to which a branch has uh, washed out, all documents are destroyed. So entity can't do anything and we can't do anything. So we cannot give an opinion until unless we have evidence. Next, circumstances due to timing and nature of the work of an auditor. It basically represents that the timing on which the auditor was appointed or the auditor came to start work, the activity had already been done and cannot be repeated. So the auditor cannot obtain evidence in this regard. So if we have a material scope limitation, we give a qualified opinion. And when we have a material plus pervasive scope limitation, we give a disclaimer of opinion. Disclaimer basically means that we cannot express an opinion on the financial statements. And adverse means that the financial statements are completely misstated. We cannot find any place where we say that these financial statements are correct. And now, if the misstatement is not material and not pervasive, we give a, if the materiality threshold has not been breached, we give an unmodified opinion. So this was a very short, precise mind map. Please remember this. It will help you a lot in deciding what should we do. So qualified opinion was discussed by us. Next is adverse opinion. Adverse opinion basically says an opinion issued in when the auditor concludes that there is a material and pervasive misstatement in the financial statement, that the misstatement has been spread all over the financial statements, not in one place. So all over the financial statements is a bigger problem. And this means the financial statements as a whole do not give a true and fair picture. This occurs when financial statements are misstated due to major fraud or error, fundamental accounting policies are misapplied across the financial statements, assets and liabilities are materially misstated. A next chart is given for your reference, which says that in our opinion, because of the significant matters described in basis of adverse opinion paragraph, the financial statements do not present fairly the financial position of DEF Ltd in December 2024 and its financial performance and cash flows for the year end in accordance with IFRS. So nothing is true here, nothing is fair here. So everything is wrong. That is said in this particular area. Next, we have our disclaimer of opinion. In disclaimer of opinion, we are basically giving an opinion. We are not giving an opinion. So disclaimer is opinion is issued when auditor cannot obtain sufficient appropriate audit evidence, and the possible effect of undetected misstatements could be both material and pervasive. In the case, the auditor is unable to express an opinion at all, typically causes books and records are unavailable. Management imposes significant limitation on access, and significant uncertainties exist within the organization. So we cannot obtain an evidence where we can give an opinion about. So we are engaged in audit financial statement of GHI Limited. We do not express an opinion on the company's financial statements of the company because of significant matters described in basis of qualified opinion, basis of disclaimer of opinion paragraph. We have not been able to obtain sufficient appropriate audit evidence to provide a audit opinion. This is how a disclaimer of opinion looks like. With this, I have given you a summary so that you can revise the possible effects, the possible areas. So when you're doing your revision, this table will help you a lot. With this, we end our section A, where we have completed our overview of audit and assurance. Now we will be moving forward towards our section B, that is basically test of controls. So till then, enjoy learning, and that's all from my side. Blah.